Hello everyone, I hope you're okay. Let's start our analysis for gold for 14th of December 2023. So looking at the Forex factory, what we got quite a heavy back news in different pairs, but the more we're interested in USD pairs. USD, which is 1:30 p.m. The rest of the day, if you trade different other pairs like GBP, CHF, AUD, we have full of news. So these are the three news we're interested in tomorrow. I hope you have a good trading day tomorrow. If you know how to trade after the news, because during the news trading is very risky, so be careful and try to wait for the market to settle down, maybe 5-15 minutes, depending on the fluctuation in the market. Right. Let's start with Dixie. And you can see that today Dixie came down. Previously, we have seen this here, that there was a rejection from here, and there's still room to come down. In fact, going to smaller time frame, this is another level here. So market can reject from here as well and test this level. Normally Dixie prices affect the gold price as well, but not always, especially if it's a sharp movement, as in this case. You will see the sharp movement in the gold as well, as you can see here. Very sharp movement here. Look, going to daily. Look, very sharp movement. And as you know that today we had FOMC, and both the news come in the favor of gold against the currency. And the news, the interest rate remained the same. And the first news was negative. The other one was as predicted. And so it was no difference, PPI-MM. And core PPI-MM was a negative, and federal funds rate, it was same as if it was negative, because the interest rate may go down in near future. So both the news were negative, and combining all the probabilities, let's go to the daily chart and we see what are the probabilities. Fibonacci level 0.786. That's the first probability we had for the rejection on the level. As you can see, this is a level here. And now you can see that why it didn't reject from the previous levels. Well, it doesn't have to be exactly. You have to look for the indications. I mean, market did try to reject from 0.6 level as well, as you can see here. Try to reject from here. And then we seen the rejection from here as well yesterday as well. As you can see here, there was a rejection. Let me go into more detail for learning purpose. This is a daily chart. And if I put the candle, this on the wick of this previous day candle, and you can see that market filled the fair value gap, and with this wick here, this was a liquidity grab as well, and it's also called spike level. So market went to that level. There's only few pips difference, and then we had a good sell trade up to here, 19. So nearly 300, 250, 300 pips. And then today what happened? What the market did, as I said, it was a Fibonacci level. That's the first probability. Second probability, was market was already too much bearish, and we were expecting some sort of move to the upside. Um, that's the second probability. So first, then second, that was second probability. And third probability, we have this morning star. That's the third probability. And fourth probability was the news. So as soon as the market was here at this level, and market gave us the indication, broken the smaller levels, and we have indication. A probability was in our favor. So we have to design our probability, build up a scenario, and then take a trade, whether it's smaller time frame or larger time frame. So it's all about managing the risk. If you took too much risk in selling the trade, you probably had a loss. But if you know, or if you took reasonable risk, even if you had your stop loss it was hit, you'll still make a profit. As you can see, market came up to this level there. Yeah. But when the market was here, you probably might have thought, oh, market may come down here because it's a bearish structure here. And it was liquidity grab from here. I was could expect down up to this level. But we had a level here, don't forget. This level is very important as well. And at the same time, we have the news effect as well. The first news, 1:30 p.m. news, according to UK time. And market couldn't break this previous level, although it was broken in the between, but how market disrespected this level. So what do we do in this situation? Uh, we just take a buy trade according to managing as by managing our risk. If you want to take a buy trade to the smaller time frame, because you see your huge level here in 15 minutes, and in the next level, the target would be around here, the first target. Although the stop loss can be bigger, so you don't have to take it. You can even go to smaller time frame and then see what the stop, what is your risk to reward ratio. So that was the another probability. So in all, we had at least four probabilities. And if I go into RSI, let me put RSI, may find a deviation, a divergence. So let me put RSI. Let me remove this yellow line, which is RSI based MA or moving average. So see, definitely there was a divergence here as well. Look at this. If I move this to here, so there's a divergence here. Market is standing at one place, but the RSI is moving to the upside. So we had a divergence here as well. That's the fifth evidence. So all the probabilities was in our favor. The more likely the market will go up. The first news and the second news. So news as well, the RSI, as well as the market structure when it's broken. So all the probabilities were in our favor. But how to take a trade? That's the question. That's a burning question, what they say. It's a burning question. So how you take the trade? So if you go to smaller time frame, if you this was a news candle, so you take trade in multiple lots, meaning that you don't have to take all the trade one, and because you keep adding the positions, I keep closing, taking the profit, and keep adding the position on the break of the level. See, once if you had a buy stop here in during the news, you had a profit straight away. You take some profit at the level here, and the next a good level, looking at this, is this one. This is a level as well, but it's not as high as this one. So you break even the position, keep your running your trade. The next level is this. Uh, this is another level. And once on the retest here in the smaller time frame, you add another position with a stop loss. Stop loss here, and here you put another trade here. So, and then you keep adding the positions. So I want to show you something interesting for the learning purpose, and that is, let's go in daily. This is, we are this fair value gap. And if you go into 4 hour, this fair value gap here, that was filled in 4 hour, and in also in 1 hour, we have this fair value gap that is filled as well. What next? So next we are looking for, let me draw this box here. Maximum movement should be here, up to here. If this level is broken, which is around a 2040 level, we can definitely expect the prices to go. In fact, this is another level on the other side of the candles, 2050. If the 2050 level is broken, then our targets would be, and we can say the gold is bullish. Now target will be 2060, 2070, 2090, and upwards. 21, 20, an all-time high, 21 high 2140, which is about 2050. So that's a bullish scenario. However, if we see a good rejection candle here, and maybe some see sort of, as you can see, this is in 5-minute chart. We see, sorry, this thing is doing some problem here. All right, we see this divergence as well. Whether this divergence works or not a problem. We look for the confirmation in smaller time frame as well. And in this kind of situation, where the market is so bullish, possibly we see bigger time rejection. As you say in the history, the market went up and then went down, and so it similarly, this is market. The RSI is overbought. In here, it was overbought. Then come down, straight down. So we would definitely expect the rejection from this area. That's the first area, and then we also, if not, we expect rejection from this area, and then we move accordingly up to at least 50% level, or golden ratio level, and then we will see how the market moves, either consolidate, move to the upside, or become bearish, and will be bearish again once this it will be more strongly bearish once this level is broken. This level 1975 level. So currently, I would say do not trade at the moment until you have clear indication the market will go down or to the upside. This is a no trading time for the gold, right? So That's it. However, if you want to trade in smaller time frame, if you can take 5 or 10 pips with smaller trouble, with smaller lots, smaller risk, then you will be fine. However, you can't take a big trade or you can't afford to take a big risk on this sort of situation. Going into Heikan-Ashi in daily, I'll see what the situation is there. Heikan-Ashi has become bullish as well. So that means there could be an indication that bullish, this daily trend, bearish trend is ending or ended. However, we'll wait for this daily candle to end and then we'll decide accordingly. So I hope you had good learning material from this video. You learn a lot of things in this video. And that's it. I'll speak to you soon, guys. And if you want to make a comment or even any specific videos, then please do come back and put a comment on the video. And also, I have a Telegram channel. Sometimes I can't make videos, so make sure you join the Telegram channel, and you can see the charts. Sometimes I put the daily charts and my analysis, because it's always not possible to make a video every day. Right. So, and also one more thing, I would say that watch my video on psychology. It's a very important video. As if you think you have psychological issue or your trades are not going well, and you must watch that video. It's only a short video, and the crux of that video is that it's like you don't have to worry about psychology if you if you follow the rules. If you know your technical analysis, you follow the rules, yeah, then you do not have to worry about the psychology. Right? I hope that's helpful, and thank you very much. Have a good day. Good night. Thank you. Bye-bye.